Fed Chair Powell signaling that smaller rate cuts are on the horizon. Joining me now, former Dallas Fed Chair Richard Fisher, Dallas Fed President, we should say. Mr. Fisher, welcome back. It's good to see you.
Thanks, Scott. Thank you.
So I'm assuming that you did see Chair Powell today, and he really did seem to set the table, or at least to bring back market expectations that it's going to be 25 and 25 at the next two meetings. Is that your take, and what's your reaction?
I'm not surprised one bit. I wasn't expecting another 50. They'll be measured. You have to remember, Scott, they're looking as well as they can, really, when you set monetary policy, 18 months out, or almost that much. So I think it was important they did 50. But now I think it's very important to take smaller cuts and make sure you're comfortable with where things are going. We're going to get some more data by the time of the November meeting, certainly more by the time of the December meeting. And, Atlanta Fed now is still showing really nice growth, 3% plus. So the plane has not landed. It's not a soft landing, not a hard landing. I think they're gliding it just right. And another 2 quarters sounds to me just about right.
Okay. So what if we said, well, everything you say is right. I mean, the economy obviously is strong. I mean, GDP revisions were strong, but the rate where it is right now, it just doesn't make any sense relative to where inflation is. They're too restrictive. They're just more restrictive than they need to be, and by the time they come down from that, it's going to be too late.
No, I don't buy that argument. I'm not sure they're more restricted than they need to be. Things have really changed as we progress through time in our markets here in the United States in particular, but globally. There's a lot of liquidity out there, Scott, and spreads are still narrow. We have a lot of private lending and institutions coming in to lend, taking a lot of space from the banks, the insurance companies, the pension funds. The dollar remains relatively strong. So given that financial conditions are quite accommodative, I would argue that with another 2 cuts, we're not going to be too restrictive. That's my stance.
Why do you say 50 was right then for the move in September? I mean, there was a dissent. Bowman only wanted 25. Why do you say 50 was right, given the case that you just made?
Well, I think I might have argued for 25 if I were still at the table, but I think it's important to sort of remind the marketplace the Fed can run a very tight monetary policy, lead to a very tight monetary policy. At the same time, to make sure that they don't overdo it, they can reverse course. So I would have argued and accepted 25 or 50, but they did 50, and I have no complaints about it.
But you also suggest that no landing, soft landing. I mean, what happens to this economy? And why don't you think that Chair Powell at this point has every right to declare victory, that he's all but landed the plane at this point? How better, I think, than anybody arguably would have expected at this point.
Yeah, I have a high regard for him, and I think he's done a good job. The plane has not landed. And his taking a victory lap really won't take place till after he leaves the Fed in April of 2026. He still has that period to serve. Now, I know him as a friend. He's a driven public servant who wants to get it right. It's not done. His job is still out there until the spring of 2026. And only then will we be able to declare victory, if indeed he is victorious.